Hi, I'm Corey Litzenberger with CGL Strategic Business and Tax Advisors online at cgltax.ca. I want to talk to you today a little bit about some of the stuff that we got from our last video. So we did it in the last one. We said, should you incorporate? And talked about kind of the pros and cons of doing so and so on. And we actually got really good feedback on that one, a lot better than we've had in the past. And we asked people, when we put it online and on Facebook and YouTube, we said, tell us what else you'd like to learn about or what else you want to hear about. And because I love hearing my own voice, so I should be in radio. But the issue then came up from some lawyers actually who said it's a common question that they get asked as well. And they said, you know what, Corey, if you could do this, it would be great. I'll even share the link, and I'm counting on you for this. So the questions to ask yourself here is, this time we're going to talk about, are you an employee or are you a contractor? Now we're going to probably put a few videos together on this subject. This first one here is going to be just on the tests to keep in mind on whether or not you're an employee or contractor. And then we're going to delve into different scenarios on the actual contract itself, and things like things to have in there, what it should look like, that type of thing. Now, it's not legal advice; it's more just from a tax auditor's perspective, from having done it myself, and as well as the other considerations that can go with those types of scenarios, such as personal services business, what that means in the corporate world, what the risks are, and that sort of thing. So, first today we'll just talk about the tests. Are you an employee or are you self-employed as a contractor? So the tests date back to the 1980s, and with a federal court of appeal case called Weeb-Dorr. Now, in Weeb-Dorr, the justices basically came to the conclusion of the following test, and the more you can answer yes to these, the better. Now, some of them are going to be a depends type answer, but the more, like I said, the more you can definitively say yes, the more likely you are going to be a contractor. So the tests are, for example, do you have control over your work and rate of pay? So if you say, you know what, here's my fee, here's my pay structure, here's what I want, you're probably a contractor, because most employees can't go in there and say that. Some can if they're in high demand, but most people can't. So do you provide your own tools and equipment? Now, when I say tools and equipment, there's going to be some that'll be small tools and things like that. That might not be enough, mechanics and so on. It might not be enough to say that you're self-employed. So you have to kind of look at a depends scenario in that regards, and the quantum of that, like how much of it, how much of the cost, and so on, how big, that type of thing. Can you hire others to work for you? Obviously, an employee cannot do that, but someone who's self-employed can. They can hire staff and they can delegate the work and so on. So if you're self-employed, definitely you'll be able to hire others that can work for you. Do you have financial risk? So is there a chance that you can be sued and lose money? Employees usually are covered in some scenario by their employer. The employers usually can't sue the employee, in the situation of doing something wrong, whereas in a contractor obviously can be sued by the person that's paying them. So do you have financial risk is a good part of that. Do you have to invest in capital? So here's where we're talking the big ticket items, not just the truck. The employees, there's a lot of employees that have to buy trucks for their work, and they get a T2200 form filled out to deduct employment related expenses. So a truck's not kind of enough. There has to be more to it. So is it like a welding truck? Is it if you have to buy more equipment to haul on site? Do you have to buy a special type of machinery, or do you have to provide your own computers, your own equipment? I mean, depending on the industry, it could be all sorts of stuff. So investment in capital is a depends on the question as well. But again, the bigger the dollar amount, the bigger the financial risk on that capital, then the more likely you're going to be a contractor. Do you have a chance for profit? Well, employees, obviously, okay, they're going to have lots of income now, but that's not profit. That's just salary, okay. chance for profit means if you find an efficiency, do you make more money? Okay, that's what the profit means in this sense. So if you find a way of doing things quicker, cheaper, faster, more efficient, whatever, but you make more money as a result, then that's the profit, as opposed to just putting in your time and getting paid for it. So that's something to look at. So I mean, for example, if you have a day rate, but you get the job done in 4 hours, and you have to they pay you for the whole day, then guess what? That's a good chance of profit. But if you bill by time, which some service providers and a lot of service providers do, unfortunately, if you bill strictly by time, chances are you're kind of shooting yourself in the foot, and you're more likely as an employee in those circumstances, because it is there are usually some minimum costs associated with any contract. And so if you are trying to say that you're a contractor, or you are a contractor, you should have some sort of minimum threshold. So for example, if you think of a plumber or electrician or whatever, they'll probably have a minimum call out charge, right? Might be $100, just to show up at the house. And so, having those minimum costs or minimum fees in place, regardless of time, can kind of, lay more benefit to showing that you're a contractor, not an employee. And of course, is the contract in writing? Now, this one is another depends, because employment contracts are also in writing, but they're usually unilateral in that the employer dictates the terms. Many contractors situations should be bilateral in that both parties are being bound to something in the agreement, which the other party can then call for breach. So for example, or say that it was breached. For example, I like to use the one about privacy. So most employer contracts will say that my employee will keep, you must keep all our information private. Okay, anything you come up with while you're working for us is mine. I own it. Okay, that's employment. But a contract relationship is, I'll say that, but then it goes the other way, as opposed to for payment. So for example, what was the first one I said was, you have to keep everything private of ours. And it goes the other way, that they have to keep everything private of yours. Okay. Intellectual capital is yours, intellectual property. So things that you make as a contractor is your property. It's not maybe considered patented because you developed it while working on their site, and so they'll be able to use it as technology that you created for them for their project. That's basically the payer's way of getting around saying, listen, you might have come up with something, a brand new widget for work for my website or for my site, but I'm not going to turn around and pay you, licensing fees 2 years from now because you finally figured out you could patent it. Okay, so that's a way of why the payers usually put that in there. But it should go both ways. It should also say that you own your product and that they can't patent, or anything to that effect because you developed it. So there should be a bilateral type of relationship in that you can hold them to account for certain things. They have to hold your information private and so on, and vice versa. Okay, so that way it's twofold. Another one I really like to see in a contract situation is interest terms. There's no interest for an employee. Okay, if we're late on payroll, sorry, you get paid tomorrow. Okay, but if you're a contractor and they're late on their payment terms, charge them a fee, charge them interest, have that in the contract, because that, I think, in my opinion, will hold more weight, even though it's not part of the test directly. I think it'll hold more weight than a traditional employment contract, because employees don't get paid extra for the employer being late on their check. Okay, so those are the things to consider. Now, there was another case here recently called G&J Muirhead Holdings, which is a tax court informal situation here that went through Edmonton or Alberta. I believe it was Edmonton. But the thing to keep in mind is that because it was informal, it's not really precedent setting, but there were some other things that came up from that and from my experience in dealing with these types of situations that you should probably keep in mind as well. Does your corporation have other sources of income? In other words, do you only invoice one person? Invoice one person, there might be a risk there, okay, of being an employee. Are you able to work for others while we're working for this payer? And if you can, great. You might not be an employee. However, it doesn't mean you can't have 6 part-time jobs, right? So So you just got to, again, it goes back to the contract, but the more freedom you have, basically, is what we're getting at here. Are you paid the same rate regardless of how many hours you put in? In other words, is it a day rate? Is it a job rate? Is it or just a flat per hour rate that doesn't change? So you put in 80 hours in a week, it's the same money no matter what. But if you got overtime or a clause built in for overtime, you probably look more like an employee. Okay. Instead, what we see more commonly in project-based, especially project-based contract, is early payment or early completion bonuses. So, for example, if it's supposed to be a 6-month job, but they get it done in 5, they still get the same pay. Okay, or they might get a little bit of a bonus because now the company can start sooner on the next thing if they wanted to. So there is those types of things you can negotiate, or rush fees. That's the other side of it. In fact, we use that here. If somebody comes in right before deadline, they're paying a premium. Okay, so rush fees is another way to get around having just a standard rate. But overtime you will not be a contractor. It's just not common. Now you could, like you said, you could put it into a rush fee scenario. If the guy says, listen, I need this project done this week, I don't care how long it takes, then you could negotiate, okay, well, here's the hours. But if you're the only person working on it, there's going to be some risk there. But if you got staff, you say, listen, I got to pay my staff overtime, and so here's why I got to charge you more for any extra hours they put in. That's fine. I think that would be, if it's worded correctly in the agreement, I don't think there would be an issue there. Having said that, it hasn't been tested, so we'll see. Are you able to take time off whenever you want? This is kind of a depends situation. A lot of contracts for service do have a timeline connected to it, depending what that timeline is. So if you turn around and say, listen, I'm going to come in every Friday to do this stuff for you, do your IT on your computer system, whatever, then all of a sudden just don't show up, whatever, or they'd probably be pissed off, and I probably would cancel the contract. But if the guy calls me and says, listen, I can't make it this Friday, but I can come in on Monday for you, or I'll come in on Saturday to do this, something come up, whatever. Okay, fine. That's probably still a contractor. But if it's an employee, it's like, no, we're only open on Fridays. I don't want you here on Saturday. It's not going to make sense. So really, there's taking time off. There's usually a common courtesy that you're still going to let your payer know that you want the time off. So it is a depends question, but it's really comes down to control, right? Employees are only entitled to so many vacation days or so many sick days or so many stat holidays, right? Whereas a contractor can take as much as they want. You can say, you know what, I'm going to take the month off if I don't have any work going on right now and don't need it, or I'm not in a hurry or whatever. So it's a little different design that way. So really, the ability to take time off whenever you want without fear of retribution is probably more of a contractor having that flexibility as opposed to an employee. So if you answered yes to a lot of those questions, especially the first chunk that I gave you from Weave Door, then you're probably in a good situation. But again, make sure that contract's in writing. In the next video here, I'm going to talk about what types of things to put in that contract as far as things to watch for, but or things that just look funny from a CRA audit perspective. And we'll go from there. And I'll also talk about tax rate considerations that you have to worry about. Thanks. It's Corey Litzenberger with CGL Strategic Business and Tax Advisors, online at cgltax.ca.